Interested to find out why the Japanese yen is falling so much and whether it will rebound in the next year, then you need to watch this whole video. At the time of doing this video, the Japanese yen is flirting at a 30-year low against the US dollar, as well as an all-time low against the Sing dollar. Given that Japan is one of our Singaporeans' top travel destinations and that how I myself is going to Japan next year with my family, I feel that it will be fun doing this video and predicting when is the best time to lock in the Jap yen. So without further ado, let's dive in. First of all, let's talk about why the Japanese yen is dropping so much. And like how another YouTuber commented, worthless in 2023. Okay, so before that, we need to understand a bit about the macroeconomics here. But don't worry, I'll make it simple for you to understand. As we all know, US interest rates have been skyrocketing in the past year or so, and is now sitting at 5.5% currently. However, if you look at the Japanese interest rates, it has been kept unchanged at negative 0.1%. Huh? Negative 0.1%? What does it mean? Okay, so let me explain here. For banks with unused cash, they usually deposit them at the government central bank and receive a small amount of interest in return. However, the opposite happens in Japan, where Japan banks need to pay money to the central bank to park their money there. This is a monetary policy in Japan that tries to encourage banks to lend out money instead and stimulate the economy, especially after their so-called lost decade. Right? This is a period of the economic stagnation in Japan. So, simply put, higher interest rates are like a superpower for the currency as it attracts foreign capital and cause the exchange rate to increase. With MES maintaining the rate of appreciation for our Sing dollar to counter high inflation, this is the reason why our Sing dollar versus Japanese yen has gone up from 1 to 75 yen to $1 to 111 Japanese yen, a 48% jump in just 2 plus years. But however, there are news that the JPY is likely to reverse the decline soon, which brings us to the next point. My wife has always been asking me to exchange JPY early to lock in the high rates, but I've consistently told her to wait because I see that the JPY is still going down. But the more I read about the news, the more I believe that this trend is about to reverse. So let me show you why. First of all, the Bank of Japan has always maintained their interest rates at negative 0.1% in order to reach a 2% inflation rate, a benchmark they set for themselves. Okay, on this note, the rate of inflation has hovered above the central bank's 2% inflation target for 19 consecutive months already. Enough time for the government to stop the negative interest rates anytime soon. Secondly, it's widely expected that the US interest rates will stop increasing, and they are also factoring a pause in December and a rate cut in the first half of 2024. Third, there are news plastered across all kinds of media talking about the potential intervention from Japan's Ministry of Finance, especially after the USD to JPY FX rate fell close to the 150 mark in October 2023. Last but not least, Japan stocks are all doing very well after 3 lost decades. Money is pouring into the country, especially after investors see that billionaire Warren Buffett has taken a bold step to invest in Japan's 5 famous trading firms. With more tourists going to Japan, more foreign capital boosting the Japanese stocks, it's a matter of time where the Japanese yen will start to appreciate again in response to all these positive developments. Heck, even the Tokyo banana prices have also increased 20%. What do you think, leh? Really, I think your next question is where to exchange JPY for the best FX rates. To answer your question, I recommend going to Sidley Reviews to do a search for multi-currency cards. Okay, so I've done the work for you. You can see that the two most popular cards are Utrip with over 1000 reviews and Revolut with 350 reviews. Personally, I'm using Utrip card due to it having one of the best FX rates among all the other alternatives, and there are over 150 currencies supported. You can see that the rate is almost identical to that found in Google. The only two downsides of Utrip are that number one, I can only enjoy up to $400 Sing dollars free cash withdrawals per month and need to pay a $5 fee, okay, subject to changes each time thereafter. Given that I like to change for the cash, right, the foreign currency upfront in Singapore, that's not a big issue for me. And number two downside is that once my money goes in, I cannot really withdraw it out in Singapore. Means I die have to spend overseas already. Then again, I will only top up what I need, so it's fine on my end too. Okay, so if you're interested to join Utrip, you can click on my referral link down below to join. You get $5 and I get $5. Win-win. To wrap up, in my opinion, assuming USD to JPY all-time high is capped at 1 to 150, since the Japan Central Bank will intervene beyond that, it translates to a maximum Sing dollar to JPY of 112. Okay, so this means that we have probably reached that peak on 15 November already, and it's time to lock in the rates now. So what about you? What's your thoughts on the FX, exchange rate, and where do you normally exchange your foreign currency? Let me know in the comments down below, and also help me smash the like button and subscribe to my channel for more of such investing related videos. Next up, if you have the time, you can also watch this video here where I look at 7 US growth stocks with over 30% potential upside. With that, thanks for watching and I will see you next time.